Hey everybody, we wanted to go through a stock that's been growing like crazy and the stock has rallied quite a bit. And ask the question, is selling $12 wings worth $12 billion? That's the current enterprise value of Wingstop Corp. Let's go through it to see if it's justified. First, let's look at the stock chart here. As you can see, Wingstop's had a really good run, especially lately in this time frame right here. The market seems to really be chasing growth, seems to really want growth stocks, which Wingstop is, and it may be overpaying for it. Let's go through to whether we think this company is worth this almost $400 price where it's trading right now. If you take a look at the enterprise value right here, that's $12 billion, right? And take a look at this year's revenue number, almost $600 million. That is trading at 20x revenue. That is a very high multiple of revenue, especially for a restaurant or franchising company. They do have really good margins, but typically this type of multiple is set aside for software companies that are growing at 30-40% with incredible margins, stocks that are going to cash flow like crazy. And as you can see, the numbers at Wing are pretty good. Gross margins 86%, really high for a restaurant company. EBITDA 33%, 17% net income margin. But take a look down here at this net income number for this year, 102 million. Compare that 102 million to a $12 billion valuation. You are paying 120 times net income. That is a huge multiple that is probably only justified if that net income number is going to explode higher. Let's take a look at where we expect to go here in the future. Annuals right here, you're expecting EPS to grow nicely, you're expecting free cash flow to grow nicely, revenue to grow. And it has grown. Last year it grew at about 27%. This year expected to grow at 28%. But then you see growth start to fall off, 17, 16, 15. If that growth does not come, you're going to see the stock massively revalue lower, in our opinion. If trading at 100 times this year's net income, it absolutely has to explode its net income. And if you look, it's going from 102 million to about, let's say, just 200 million in 4 years. Even if you put a 50 multiple on 200 million out here, you still only get an enterprise value of about $10 billion, which is below its current. So in fact, we think that even more growth is being priced in the stock than even this model has, which puts us at massive risk. When is it most at risk? Well, it's most at risk when it misses its quarterly numbers, which are coming up here on July 31st. If you look, it grew at 21% last 2 quarters ago. Last quarter, it grew at 34%. So really nice explosion in growth there, and it expects to grow at 32% this quarter. If it does not hit this number here or in the future couple of quarters, which expectations are extremely high, the bar is really high, I would say look out below, watch out. Wingstop is definitely going to reprice lower because so much growth is priced into that multiple. That's it from us. Hit us with questions. Really appreciate your time.